Demand is coming, and it is coming fast. So you need to do absolutely everything in your power to buy as many coins as possible while we're still early. Now, I know before any of you comment down below, I get it. I'm in the same boat. It's hard when you've been buying altcoins the last 12 months. You don't really have any more money to put into the market. But come on, guys. This is crazy talk. This is crypto after all. There are countless ways we can maximize our gains, which will make the most amount of impact for our portfolios if we start now. I don't want any of you letting that little voice in your head who tells you to just play one more game before bed or hit the snooze button, you can go to gym tomorrow, win. Now really is the optimal time for us to do this, so I, for starters, am really glad you're here taking the time to watch this video, because it really is our last chance before major demand does come into the market, and when it does, you are going to wish you did more now. Now, the reason I can say to you that you will regret this over the next 12 to 24 months is because I regret not doing this in the last cycle. I remember thinking to myself, as 2022 began, oh my God, if I had just done what I'll show you today and put it into practice, I would have ended up with a couple $100,000 more than what I did at the end of 2021. So it's very important you understand this. And again, I'm going to kind of go over it. But first of all, I need to prove to you that demand is going to be insane. This will be crypto's largest year by far. We can thank, of course, the additional interest from the Bitcoin ETFs from all that, but I want to take you through who these people are, what they're saying, what their predictions are, and then I've plotted it on a couple charts just to give you an idea, a visualization. Again, this is very important for us to do, and then we will go into my strategy, because you got to know, I got to, I guess, convince you that now is the best time to do this. If you wait, you're going to miss out, okay? And there's only so much I can preach and repeat myself, but you guys are going to have to listen. Again, stop those little voices in your head convincing you it's not important, because it is, okay? So number one is Van Eck. Van Eck is an asset manager currently issuing their own spot Bitcoin ETF. These guys have about $100 billion in assets under management. Now, they're predicting Bitcoin on November the 9th will hit a new all-time high, likely just $70,000, right? Just above where it was the previous cycle. And they've even come out and mentioned, not said, but mentioned that Bitcoin might hit $100,000 by December. Now, we also had Bitwise, another Bitcoin spot issuer over here. They're saying $80,000 will be the price of Bitcoin, setting a new all-time high this year. They have about $1 billion in assets under management. You also had the largest asset manager, in this case, AllianceBernstein. They have about $700 billion in assets under management, almost the 1T mark. They're saying as well $80,000 is their target. Now, we also have, finally, last but not least, Bitfinex, I guess, tier 2 crypto exchange, saying that the global market cap will be 3.2 trillion. They never gave a prediction for Bitcoin, but the global market cap will be 3.2 trillion, which is again impressive because the previous cycle's cap was just under 3 trillion. So if we plot this, this is what I firmly do believe the chart will, roughly speaking, look like, given these predictions come true. Now, I think we're in the ETF buzz right now, so I still think we'll go up to about $50,000, maybe even close to $60,000. But I feel like before the halving, we will come down, just because of, there's nothing really propping up this Bitcoin ETFs. There's no institutional money just yet. And when they actually do come in, there is, predicting at least, not going to be that much anyway. So I feel like we will come down and we will be squeezed down until the halving. The halving, of course, creating the bull run in its typical fashion. But if we plot the predictions from all of these guys in aggregate, we are looking at between November the 9th over here to the very last day of 2024, between $1.37 and $1.96 trillion for Bitcoin's market cap. So this would have to be, roughly speaking, what the chart would need to look like in this case, okay? Again, this would be basically a new all-time high set in over here, and the 100K mark would be quite substantial. I don't know if that will happen, but either way, they're at least predicting about $80,000. So right over here, which is nuts to think about. So if we go over then to the global market cap and have a look at, again, what Bitfinex actually said when we plot this, Bitcoin at $70,000 and Bitcoin at $100,000 will be a 2.7 and 3.92 trillion global market cap. And if we worked out what about $80,000 mark would be, it would be the 3.2 trillion global market cap level. So they're all basically agreeing $80,000 Bitcoin and $3.2 trillion global market cap, which is just nuts. To give you some idea, we will be at that point higher than Apple's market cap, which we haven't been too much. Again, this is roughly speaking the global market cap we were at in 2021. And we also had the rainbow chart somewhat agreeing, albeit more bullish, for Bitcoin's price prediction for 2024. By December, this is predicting that will roughly be at about $140,000. I think a little bit lower than that, admittedly, but it is good to see a higher price rather than a much lower price in this case. So I just basically went off 8 months after the halving, 8 months after the last halving, and then worked out the kind of growth. And then so we'll roughly speaking be at about the, orange, dark orange to light red areas speaking. So that is good to see. Now, I want to bring you back to why I'm talking about this. It's to take all the altcoins you have in your portfolio and squeeze as much value out as you can while we can now. Now, it's important to do this now because you actually benefit from the market not being as insane as what it will be in the next 8, 9, 10, 12 months, especially the next 2 years. The longer we leave it, the worse it becomes for two things, and I'll touch on those two things momentarily. But this is where I think we can probably find most of our altcoins, or most of the market roughly being in the next, 11 or 12 months here. So Solana at like $250, Ethereum at $5,000, maybe even Bitcoin, of course, higher than this, Polkadot $52, Avalanche, so on and so forth. Maybe even more because, again, these ETFs will bring more demand into particularly Bitcoin, give the space more validity, then the sort of waterfall effect will flow into large caps, small caps, and we go on from there. So here's what I'm talking about. It's in regards to staking, okay? Now, the two things we have to understand with staking is, one, compounding, which I want to take you through an example on how much money you can make in a second here. And the second thing is, again, being early, not because you can compound more. And if you don't know what that phrase is, don't worry, I'll get into it momentarily. But the second thing is, of course, with a lot of these protocols, you actually benefit or get higher APY, so get higher rewards, when there's less staked in the network. There's less staked in there, of course, the rewards go down because more people get in the rewards. But when the amount staked goes down, okay, it's less secure, the APY goes up because it wants to incentivize people to come in and stake. So, for example here, argument's sake, let's look at Cosmos. And so with Cosmos, if we plot it over here 1.5 years, the staking ratio is currently 64%, meaning that 64% of the market cap is staked right now. But if we brought this up, have a look at the 365-day earning at $1,600. If we bring this up, look how fast it starts to diminish, okay? And of course, right towards the end, it gets kind of crazy. Same thing with Polkadot over here, okay? If we kind of bring this up, with Polkadot, look how fast it diminishes, right? So it's bad. And this is why you have to get in early, because if you're in early, even though you might have over time, the APY might go down, if you get in as much rewards as possible now, it's going to, of course, benefit you. More rewards equals better, right? Makes the most amount of sense. So I want to take you all through the compounding strategy and effect here in a second, because I know a lot of you don't really consider this, right? You're probably thinking to yourself, Kyron, this is like your, fourth video on staking. I get it. Why is it really important? I mean, look, I don't want to sound like a broken record. That's my last thing I want to be, all right? Is someone who repeats himself and no one listens. That's my worst nightmare. So probably the worst nightmare a lot of you have. But I really want you to understand this. It's for your benefit. If you haven't looked into staking before, again, get that little voice out of your head. Get the, this might take me a couple of hours out of my day. I want to go play some Call of Duty. Whatever it might be. Whatever excuse you make up to not do that or not want to go for a cold shower in the morning, I want you to stop and do it. Please. You're going to thank me later. Okay, so to give you some perspective on this, the amount of money I've made in the last month is $14,100 from only these 4 coins. That's it. None of them have some crazy APY, by the way. They're all pretty well reasonable. It's a lot of money. Now, of course, this isn't how much money I've made from just staking. This is if I were to sell the tokens at the price I intend to sell at, because that's when all these gains are actually realized. So it's a lot of money. Now, the beauty of compounding is you can take that $14,000 profit this month and add like $2,000 to it next month. And the next month after that, add an extra $2,500. And then after that, $3,000. And so the beauty of compounding here is that your rewards just don't continue at that same pace. They compound, meaning they get larger and larger and larger. It's like an exponential growth, right? It doesn't look like this. Growth isn't like this. You're not just rewarded the same amount of tokens every time. It's like this. It's called exponential growth. Well, that's actually a bad chart, like this, right? So it gets more and more and more every time because it builds on top of each other. So what this looks like is, again, if you staked your NEAR tokens, for example, and you earned NEAR, and this was your reward, so let's say you got 1 NEAR token staked and you got 1 NEAR token back. Well, if you then take this 1 NEAR token you had and you put it next to this token, you have now 2 NEAR tokens. And then the APY is calculated from these 2 NEAR tokens. So that might mean you might get, 1.5 NEAR tokens. Now, if you then restake that, you have 3.5 NEAR tokens. That is then compounded, and then you might get 2 NEAR tokens. And then you get those 2 NEAR tokens, and then you put them here. And then next you might get 2.5 NEAR tokens. So it goes on. That's compounding, okay? And if you kind of compare this to you just simply staking NEAR, getting the tokens back, and then rather than putting it back onto the pot, the total, you just held them in your wallet, or you just sold out and had cash, you're still getting staking rewards because you're staking, but it's a lot less over time. And that's why it's important to be early and be now, is because you will have the benefit of that. Plus, of course, not just that, you will have a better APY because demand will bring in more people. More people will meaning they're going to stake more in the network, especially traditional investors. They're going to want yield and so on. It gets worse from there. So you're getting the benefit of compounding and being early. That's why I'm telling you and preaching you to do this before the demand comes. So again, what this looks like is, and I visualize this briefly and basically, if you took your profits out each month, if you had 10,000 NEAR protocol tokens at 10% yield, APY, well, you'd get $35,000. $35,000 after 12 months, guys. That is insane. I mean, you for starters know it's possible because you've seen how much money I made the last month. 1 month. It's 12 months in a year, okay? So in this case, if you actually decide to compound, right, over here, you get now 11,047 tokens. So you can make an extra $1,600 if you just put those tokens back. Here's the trick. Here's where it gets kind of complicated. You can, depending on how many times you compound, like how frequent you do it, you get more back. So if you compounded once a month over 12 months, so every single month you went into your NEAR protocol wallet, if it didn't automatically do it, and then you took all the profit and put it back into the pot, you would get an extra $1,600. But if you compound daily, so every day you went into your NEAR protocol wallet, you signed in and you took your rewards out and you put it back on the pot, because you're doing it every day, this process over here is calculated every single day. Therefore, you get $175 more. Okay, this example, $175, that's whatever, it's not that much. But you can imagine for different protocols, that might be the difference between an extra $1,000 or $2,000. And I don't know about you or where you're living, but the world's looking pretty gross right now. So every cent counts, okay? Now, this whole idea came from Rich. So Rich said to me in Discord, by the way, join the Discord down below. It's completely free. You have access to everything, including this sheet I will leave down there. He said, Kyron, I don't know if you've done this already, but I want you to do a video on how to stake your different tokens, HBAR, Link, Matic, QNT, so on and so forth. Now, I think I'll make a dedicated video for each of those if you want me to. The only way I know is if you leave a comment. Otherwise, I just won't, right? Because they will take a little bit of time to show you all. But if we have a look here, this is sort of like the process I would tell you all to do, right? So the first thing, keep it brief, is to go to Google and just simply type in, where to stake HBAR, where to stake MENA, or MENA wallets, HBAR wallets, because the goal here is to find non-custodial wallets like MetaMask. Do not use the website. I don't care if it's Binance. I don't care if it's your neighbor. I don't care who it is, because if that website like Binance were to crash, or there was a run on the bank per se and they couldn't honor withdrawals and it just goes down for some reason, right? You are stuck with that. If the network you're staking in, like NEAR, keeps running, it's adding insult to injury. You can't access your tokens, people are still making money. Whereas if you get a non-custodial wallet and you stake on that or through that, decentralized way somehow, and the network dies, well, everyone's lost their money. It's bad, but it's not like as insult to injury, if you know what I'm saying. So always do it through this way. Now, once you have an idea of if you can stake the token or not, and you've found a wallet, come over here and verify the wallet is legit by looking at the project's website, okay? Find wallets or staking on the ecosystem overview, or if it's a dApp, go to the layer 1 itself. So if you're looking at HBAR, for example, to stake HBAR, or you have a specific dApp you're using on HBAR and you want to see if you can stake it in a wallet, it's simple. Come to the layer 1, or again, come to your project if it's a layer 1, go to the ecosystem, come over here to view all, if you can have a drop down or a search bar, and then find wallets. It's as simple as that, okay? And these are all your different wallets. Now, I know Hashpack allows you to stake in them. Don't know about these guys, but what you'll do is just go to the website, go to each of their websites and have a look if you can stake your tokens on them, okay? And you can, of course, Hashpack. Again, MENA situation, right? MENA wallets, simple Google search because they don't have an ecosystem page on their website. So you'll just find wherever there's an official MENA protocol link, this one over here, MENA protocol docs, click that, and then you'll find the ones in which they mentioned, as you can see here, all the MENA wallets. And in this case, you could have a look to see which is the best option. In this case, I would believe Oro Wallet is, which is what I use. They support more things, meaning they're probably a better, wallet, for example. Download it, install it, have all your seed phrases stored in many different places, however you wish to store those, but you must do it this way, and then stake. Now, sometimes you're not going to have that option, right? Sometimes you're not going to be able to actually stake via a wallet or via some way with the network itself. So there might be a liquid staking alternative. So you can search this up by also doing the same thing in the ecosystem as we did here with Neo Protocol, or jump to DeFi Llama for Solana, liquid staking, Gito, Marinade Finance, over here JPool, or for Ethereum, of course, we know Lido staking. So look for liquid staking, look for staking services. Of course, the benefit of liquid staking is you get a token back that allows you to trade with the underlying asset of your staked tokens. So you want to do that for the different situations, and of course, just figure out a way in which you can stake. There is, of course, a little bit of risks when it does come to moving outside of this, right? So for some projects like Pyth Network, Uniswap, don't use a yield farm. You can, it's your own discretion, but I would never use a yield farm when I'm looking to stake. I just wouldn't stake at all. Of course, if there's no reward for staking and you just get governance, you can do governance if you want, but I wouldn't personally want to risk just for governance. That's like Pyth Network. So in this case, guys, make sure the ones that you're actually looking into can be staked. And if they can't, or they don't offer you returns, I wouldn't even bother. Now, some like Chainlink, this is a dApp, of course. Chainlink does offer native staking now that they have the Economics 2.0. So you can stake directly to a Chainlink node, which is fantastic. So in that situation, you can. Just requires a little bit of research. So let me know down below if you want me to do a bigger breakdown into individual altcoins. I can do a general review and then also touch on the staking mechanism as well. It's up to you guys. I only want to make what you guys want to see. So with that being said, everyone, thank you so much for watching this video. Please, this is urgent. Get in now before it's too late. I'm telling you, I've learnt from my own mistakes, but I hope you don't. So with that said, I'll talk to you all tomorrow. Take good care.